try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the major rally, well, not major, but the small rally that Bitcoin has witnessed over just the last 24 hours, ever since the Senate finally reached a last-minute decision on the United States debt ceiling deal. Passed the House a couple of days ago, passed the Senate about 10 hours ago, late at night, and it now seems that there is a bill heading towards the president's desk that he will probably sign and agree to that will kick the can down the road on this debt ceiling debacle for another 2 years. That staves off some of the dark clouds that we've spoken about on our Saturday video over on the Climate of Crypto video that we discussed how the debt ceiling is one of the major factors that is leading to fear in the Bitcoin and the cryptocurrency market. In fact, I said it was a Saturday video. I apologize. It was the Wednesday video. It came out 2 days ago. And in that video, we talked about how one of the big things that is hanging over Bitcoin's head right now was this debt ceiling fiasco. And it seems now that Bitcoin is moving in the direction to the upside as those dark clouds have started to be alleviated. We're going to be talking today about how the deal for the debt ceiling seemingly has been reached. We're going to talk about the Bitcoin technical analysis. And then third, we're also going to be talking about something called the yield curve and throwing in a couple of other details there to do with the unemployment rate and CPI. Because although it seems right now we've staved off an absolute economic 2012 style cataclysm from having a debt ceiling deal reached, it seems that there could be a recession coming with a hard landing here in the next 1 to 2 years as a result of all of the Fed rate hikes. We're going to be talking about what that would look like for Bitcoin coming a year from now when we see the halving event taking place. What happens if Bitcoin is going through a halving in the middle of a recession? How would that look for the Bitcoin market? We're going to talk about all of that and more in today's episode of Coffee and Crypto Live. I think you guys are going to really enjoy what we have to cover today. Really excited to bring you guys a cool tip when we talk about the yield curve for how you can actually make some passive income that is risk-free. All right. I think you guys are going to really like this. This is a little bit more of a traditional finance kind of thing, but there's plenty of money to be made there as well. All right. Let's go ahead and read some chat. Really appreciate all of you guys tuning in. We've got Grand Roofing Incorporated in chat, said, good morning, everybody. Good morning to you, Grand Roofing. Really appreciate you and all of your continued support over the years, my friends. Alex Nybo in chat said, good morning. Mike Lowry in chat said, good morning. RC Moore. Good long-time viewer of the channel said, hello, my friend. Everybody's saying hashtag Fence-Off Friday. As you guys know, the dream, the vision, the mission for our channel here is to help you achieve financial sovereignty. I want you guys to get to this place where you have absolute authority, dominion, and control over your finances, and you are in a position where you are able to grow them, and you're in a position where you are not in debt, and you're in a position where you are not in the grips of total just financial poverty. You can be making hundreds of thousands of dollars a year, but still be in this kind of state of poverty because you are spending more money than you are making. You have a ton of debt that is hanging over your head. You don't know how you're going to make ends meet. That is a stress that you don't need for yourself. Jesus commands us to not worry about tomorrow, for today's troubles are enough for today. One of the ways to make it easier to not worry about tomorrow is to sort it out so there's not a concern of bankruptcy in tomorrow, right? It makes it a lot easier to not be worried about tomorrow if you've been a good steward of your finances and there's nothing to worry about for tomorrow because you've been a good steward of your finances. And that's something that I want to help you guys achieve. But of course, we're also doing that through the lens of Bitcoin and cryptocurrency technical analysis. And so I'm really excited for what we've been doing here on the channel lately. Grand Roofing Incorporated said, I get to enjoy the show, listening and glancing to the video while mowing. Shout out to you. There we go. When people said, good day and God bless all. All right. Good morning, everybody. Let's see. Derek Brown said, Mixed Magic said, yo, let's crash the whole financial system. That would be a little difficult because if you crash the whole financial system, then you're going to crash kind of the thing that Bitcoin's trying to renovate. See, here's the deal. Bitcoin has this mentality that it can bring to the traditional financial system, specifically to the way the United States government runs. It's completely backwards and broken. running on this massively financially unsovereign position. See, here's the deal. The United States runs a deficit every single year to the tune of about $1.46 trillion, and then it makes up the difference by borrowing money from a bunch of different people, but some of them from us in the form of treasuries and T-bills. We're going to talk about government bonds here in a minute and what they're predicting, and also how you can make some money in them. But the government is not a financially sovereign example. You know, the government should theoretically anyway be an example of how we should live if it is a just government. Clearly, that's not what we have in the United States. Clearly, that's not what we have anywhere in the world because, you know, humans make up the government, and humans aren't always the best examples. But theoretically, we should be able to look at the government and say, I want to be like that with my finances. That's not where we are right now. Don't hear me wrong here and think that I'm saying we should look at the government and run our finances like that. We absolutely shouldn't. What we therefore need to do is that we need to be an example because we, the people, are the ones that elect the representatives that go to government. The more financially sovereign that we become as American citizens and as citizens for whatever nation you're in, most countries around the world run a deficit. So this is true wherever you are, but I'm just talking to the Americans really quickly. If you want to see change in your government, let's see change in our lives. Lord says, get the log out of your eye. If we're running a massive deficit every single year in our personal finances, who are we to complain at the government for running a deficit every single year? Because we're hypocrites. We're also the electorate. So that's where we need to become financially sovereign so we can be an example to the lawmakers who will probably not look at us as examples, but we have a vote. So they need to impress us because we're the ones that are voting for them. Let us not forget that at least to some degree, there is still some kind of democratic freedom. So let's go ahead and talk about Bitcoin to start with just briefly, and then we're going to talk about the debt ceiling. Then from there, we will move into talking about the TA on Bitcoin, going in more detail, and then we will talk about the treasuries and the bonds and what they're predicting for the next couple of years. All right. Good deal. Let's kick it off by doing a little bit of a market recap, and then we'll jump straight into the U.S. debt ceiling arrangement that has been reached. Right now, Bitcoin has been trading sideways over the last 24 hours. Theoretically, anyway, it is down 0.03%, trading at nearly $27,000, up 1.38% over the last 7 days. Ethereum's up 1%. Happy to see it. It's up 3% over the last 7 days. Total cryptocurrency market capitalization has grown slightly in the wee hours of the morning. If you just look here over the last little bit, you can see that we've grown in market capitalization by about $10 billion since late yesterday. So we are seeing some growth in the cryptocurrency space. And I think a lot of that has to do with the fact that the stock market has been doing very well in light of this debt ceiling deal. This is a huge, huge, huge step forward, what we're seeing right now on U.S. stocks. The stock market just opened a couple of minutes ago. In fact, if we just look down here to the 30-minute chart, you can see we opened at 9:30. So we opened like 45 minutes ago, and we opened relatively high. We opened up here at 424. That is the highest level, if we just draw a horizontal line right here, that is the highest open price that the United States stock market, at least the SPY, has seen since August of last year. It's been nearly 8-9 months since we've seen an open price that high. And with that open price up there, even though we had a quick drop, but we're starting to recover some of that, we've now broken seemingly conclusively above $420. Now, the question becomes, are we going to do the same thing that we did over here in August of 2022? Are we going to see a major rally and then just a major drop? I'd like to think not, and part of the reason for that is because, one, we broke above this downtrending level of resistance. Two, we broke above this flat level of support of resistance. And three, this news story came out. So let's go ahead and jump into the big story of the hour. This is probably the most important financial story that is happening in the United States right now. Not going to go into too much detail on this article. I'm just going to kind of use it as a launch pad to speak on this. Just days to spare, Senate gives final approval to debt ceiling deal, sending it to Biden. So whenever you have a bill that normally goes through the House, depending on the kind of bill, it can go Senate, House, House, Senate. And this one went through the House and then went through the Senate. It's been passed, as it says here in this article. It was approved in the Senate on a bipartisan vote, 63 in favor, 36 nays, somewhat reflecting the overall House majority, the overwhelming House tally the day before, and quite a lot of Democrats sided on this. Seemingly, that will make it more likely for U.S. President Joe Biden to agree to the deal. And here's the deal. The debt ceiling has actually been hit several months ago. If you go to usdebtclock.org, then you will see U.S. debt is already sitting at $31.822 trillion. So the U.S. debt is already massively, massively, massively higher than the debt ceiling, sitting at $31.4 trillion. They already needed to raise the debt ceiling. Right now, Janet Yellen is basically just kind of riding on cash because she needs to be able to have cash. And so come June 5th, when the government runs out of cash on hand to pay all of its obligations, if a debt ceiling arrangement is not met, where the United States Treasury is able to go issue new government bonds and able to go take on more debt, if it's not able to do that, number one, you won't be able to buy new treasuries, and you won't be able to buy new bonds. But more importantly, the knock-on effect of that is that the government won't be able to raise money, and that will send them into default, which would destroy the credibility of U.S. Treasuries, which are largely considered to be totally risk-free. I think it's helpful that we're talking about the debt ceiling the same day we're talking about treasuries, because they're extremely related. We're going to talk about T-bills and bonds here in a little bit, and the implication that they have on the United States markets. The debt ceiling being hit would be cataclysmic. So this deal is very, very important, and it was always probably going to go through. This was likely never going to actually lead to a default. We've seen the debt ceiling raised 78 times. This will be the 79th time since 1960. So that's more than one time a year the debt ceiling has been raised historically. And then there's also been plenty of times, especially over the last 10 years, that they've just put a pause on the debt ceiling and said, you know, we're just not going to worry about it for a little while. It's kind of a joke the way the debt ceiling works. It's like having a credit card limit that you never hit because it always gets raised before you hit the credit card limit. Why even have the credit card limit? Regardless, the deal has been reached. It will go to Biden at this point. Biden will probably sign off on it. He might say, I want to make a couple of amendments here. I don't think he's going to veto it. It'd be pretty stupid for him to do that, because at this point, this final hour, if he does, it would be kind of difficult to send it back through Congress in time. So Joe Biden doesn't want to go down in history as being the guy that destroyed the United States economy, which he's already being accused of. Because if he did veto this bill, then he would, and he didn't sign it, then he would probably end up being the one responsible, at least the one that got most of the blame and the ire, because Congress managed to pass this with bipartisan support. So that will likely get signed off today, and within the next 12 hours, when we see that signature, then we'll likely see the stock market rally even more. So if you'll remember, the United States stock market kind of transitioning into Bitcoin now, and we'll just do a little bit of a couple minute transition here because there's a bit to talk about in the overlap. The United States stock market is largely driven by U.S. economic policy and by the growth of the corporate of business in the United States, of course, because the stock market represents the value of the corporate, and by corporate I mean all of the corporate market capitalizations combined. So the SPY is reflecting how all of the other tech companies, how all the other construction companies, how all of the other medicine companies, pharma, whatever companies are doing. With the seeming scare of a debt ceiling triggered default being pushed off, now the stock market is able to push through $418. That is very exciting because, at least for us here in crypto, the reason that's very exciting is because the United States stock market is heavily driving the Bitcoin market. If you go to BTC USD chart and then you overlay the stock market on top of Bitcoin, you can see the stock market is one of the major drivers of Bitcoin. This is an extremely positive correlation. Positive correlation just means that if one chart goes up, it makes the other chart go up. And negative correlation means that if one chart goes up, it makes the other chart go down, and vice versa. Down, 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 up. Those are positive and negative correlations. Positive correlation is up, up, down, down. Negative correlation is up, down, down, up. Right? You see the difference there? Stock market is positively correlated to Bitcoin in a causal fashion. What that means is that the stock market tracks with Bitcoin, and from everything we know, the stock market is the one leading Bitcoin, not the other way around, because the stock market in the United States is, about 100 times larger than Bitcoin. So Bitcoin has been attempting to go into a small rally over just the last few hours, with the stock market going through a rally. Now, something you need to keep in mind is that if you look at this chart, you might think, Jeb, the stock market's jumped a lot over just the last couple of hours. Why hasn't Bitcoin rallied yet? Well, I want you to keep in mind that the stock market just opened a couple of hours, like an hour ago, and is doing very well, but Bitcoin hasn't really had a lot of time to respond to that yet. The Bitcoin market is likely to go through, and let me just come back to a chart where I can go down to the shorter term time frames here. The Bitcoin market is likely to do pretty well today as a result of the stock market doing well, but Bitcoin needs time to recognize that that's happening. Once the stock market does finally undergo a break and a confirmed breakout above the $420 level, then that's where Bitcoin is likely going to do very well. Bitcoin is probably wondering, hey, is the stock market going to be able to break above that level and hold above that level? Or is it going to break above that level and fail in a similar way that it's done recently, just over the last couple of days, going back to May 22nd, May 19th? Or is the stock market just going to rally and break up above that level and then fall below it again, the same way that we saw in August of 2022? On top of that, the Bitcoin market is not just excited because of the stock market rallying. It's also excited because of this debt ceiling arrangement being passed. Bitcoin and the cryptocurrency space are a little bit more skeptical, and the stock market is also, and the Bitcoin market is also downwind of the stock market. I think it's going to take some time to see a rally on the stock market, and the debt ceiling being passed have knock-on effects on Bitcoin because the stock market is largely rallying because of the debt ceiling. So the debt ceiling is leading to the stock market rallying. The stock market is leading to Bitcoin rallying. There's a few points of contact there that the bullishness has to travel through to finally get to Bitcoin, which means it's going to have some transmission losses, but it also means that it can take some time. And so I do think Bitcoin will rally, but I think Bitcoin will rally somewhat, slightly, over the next couple of days, but it's going to take a little bit of time. And I think once we actually see a signature on that bill and we get the whole, look at this, I have my fancy signature right here, that picture posted on Twitter, then we will have a rally on Bitcoin. That being said, I don't think it's going to be a very large rally. Do you remember the Wednesday's video? You guys, the video did not get that many views, but I really wish more people had watched it because I really think it gave a lot of great information on what we're looking at right now. In fact, I'll just show you here on the channel. I don't even say this to plug our own channel. I just think you're missing out if you did not see this video because it gave a lot of insight. The United States is going bankrupt, debt ceiling explained. If you watch this video right here, I didn't just talk about the debt ceiling, what it is, explain how it works and the impact on Bitcoin. I also talked about two other factors that are coming up here in the next 2 weeks. On June 13th, CPI data is going to be coming out. June 14th, the effective federal funds rate is going to be coming out. Those are potentially going to be very bearish stories for Bitcoin and cryptocurrency, and those are not stories that we are necessarily looking forward to anymore because there was likely going to be a pause. Some people are saying there's going to be a pause. There's a lot of back and forth. I'm not convinced until I see it that there's going to be a pause. You can even see over here on FedWatch tool for CME Group, they are predicting with a 70% likelihood a pause, a 30% likelihood of a hike. It was just a couple of days ago, 1 week ago, that they were predicting with 65% likelihood that there was going to be a rate hike. I'm not convinced at all that there is going to be a rate pause yet until I see it. So I'm still pricing in as though there's going to be a rate hike. And if there is a rate hike, that's going to lead to a downturn on Bitcoin. The reason that Bitcoin's having trouble rallying right now is because not only has the debt ceiling deal not actually been signed off by the president, which means it's not actually solved just yet. There's still a potential that he could veto it because obviously this is dealing with compromise. So there's things in that bill that he doesn't like. If he doesn't like it, he has the sole authority of any human being on planet Earth if he uses it. You know, sometimes the president does what he's told to. I'm not just talking about Biden. Every president doesn't. If he does what he wants to do, he has the authority in his own person to say, nope, I'm not going to sign that, and then send it right back to Congress. So there is still some of the human element, some uncertainty there over what President Biden might do with that bill. That is leading to FUD in the Bitcoin market. And of course, there is still quite a lot of concern in the Bitcoin and cryptocurrency market of June 13th, June 14th, when CPI data is likely to come out lackluster, if not even rallying. And then the very next day, the effective federal funds rate is likely going to hike. I've been telling you guys about that being on the horizon for several weeks now. June 13th, June 14th, that Thursday and Friday. In fact, it's going to be the Thursday and Friday after next. I'm sorry, not Thursday and Friday, Tuesday and Wednesday. That's going to be a very difficult time for Bitcoin. So at this rate, considering that we've seen some kind of agreement reached on the debt ceiling, even if it's not concluded, and considering the stock market has not, the stock market is breaking above $420, and Bitcoin has not gone through a large rally, it's actually leading me to the conclusion that it seems like Bitcoin may finish out this downtrending trading zone here before entering through the gates of bearishness on June 13th and June 14th, where it will witness that CPI lackluster read and also witness that effective federal funds rate hike. And then from there, then Bitcoin will either slowly, more than likely, go into a rally over the course of late June, early July, all of July really, and on into August. Or if one of those data points or both of those data points is more bullish, then we'll see a more rapid rally. But I think that we're going to see a continuation of downwards price action, at least for a little bit. Maybe tomorrow it'll pick up as a result of, I mean, today's Friday. People tend to buy Bitcoin on Friday. Friday is normally a high day, so that could end up impacting things. That could lead to a little bit of bullishness today. Maybe Bitcoin just needs a day or two to see if the stock market's really going to prove its mettle, to see whether or not we're really going to stay above that level. Maybe Bitcoin just needs some time to see if the United States debt ceiling deal is actually going to get reached. Then also, there's another factor here to consider. The Dixie is dropping, and is dropping aggressively. You can see right here, the Dixie rallied all the way up to 104.68, dropped all the way down to 103.4 over just the last 2 days. that movement right there could also lead to some fuel for Bitcoin. So it almost leads us to the question, like, why is Bitcoin not rallying more? And then we'll talk about that question, and that'll lead us into our third segment here. Why is Bitcoin not rallying more? You know, we've got seemingly we've got an agreement on the debt ceiling. Seemingly we've got the stock market breaking bullish. We've obviously, because we can read it on the chart, we've obviously got a drop on the Dixie. So why is Bitcoin not rallying? Well, I think there's a couple of different factors there. One of them I'm going to talk about in tomorrow's video because it's one factor that could cause a gigantic crash on Bitcoin that could drop Bitcoin over $5,000. You heard me right. There is a technical that I'm going to talk about in tomorrow's video that could drop Bitcoin by over $5,000, in fact, over $7,000. And so we're going to talk about that view and whether or not that is a credible view and a view that I subscribe to and a view that will come true. That being said, I'll leave that for that video. But the other factor that I want to talk about is the concern on the horizon of the next year being extremely bearish. And so that will lead us into our third segment here, talking a little bit about U.S. Treasuries, U.S. T-bills, and the yield curve. You've probably heard about the yield curve before, but let me break it down as simply as I possibly can because that will help us to lead into what we're talking about here. Now, I have this in a table form, but let me see if I can find a yield curve diagram to give you a little bit of an example here. So there's three different ways that a yield curve can play out. On the y-axis, you've got the yield. That is a percentage return of a United States Treasury. So the United States Treasury is a debt instrument that is issued by the U.S. Treasury. Janet Yellen, remember that lady who's trying to raise money? Part of the debt ceiling is telling her whether or not she's allowed to go and give out treasuries and take loans from the United States people. So U.S. Treasuries are basically a lending instrument where you can lend money to the United States government and they'll pay it back at a certain term. So they'll pay a certain interest rate and they'll pay it back over a certain maturity date. So on the x-axis, you've got the maturity. It's measured in 1 week, 2 week, 4 week. You've got the T-bills down there in the smaller yield. You got the 13 week, 26 week, 52 weeks. That's the 1 year. You got the 3 month, 4 month. Then you've also got the rest of the bonds that go out to like 2 years, 3 years, 5 years, 10 years, 15 years, 20 years, 30 years, something like that. You've got the different bond lengths. Got your, I guess this is flipped. So over here, you got your y-axis. That's the yield. Over here, you got your maturity date. How long do you lock that up? Whenever you buy a T-bill or a treasury or a bond, a treasury bond, then you are giving them money for a certain amount of time. And if you take it out, then there's a penalty. Because if you loan somebody if you loan somebody $100 and you say pay it back in 20 years, they're going to be a little annoyed if you try and get it back in 10 years because they weren't expecting to have to pay that money back right then. So there's a penalty. And so you've got that maturity. That's how long you leave the money in the bond, traditionally, unless you pull it out early. Then you got the yield. So the yield curve has to do with whether or not the shorter maturity treasuries are paying more or less relative to the longer maturity treasuries. Here's a diagram that'll help you to understand it from Britannica. You've got the yield over here on the y-axis. You've got the maturity here in years. There are three different kind of yield curves. You've got your normal yield curve, you've got your inverted yield curve, and you've got your flat yield curve. You can kind of just not worry about the flat yield curve right now because the flat yield curve is a transition from a normal to an inverted yield curve. When you have a normal yield curve, that is essentially saying that, and this is all tying back into why a recession might be coming and how that might impact Bitcoin, just so you know. A normal yield curve says, okay, so your 1 year treasuries are going to pay you 1%, whatever the number is. Your 2 year treasuries are going to pay you 1.5%. Your 5 year treasuries are going to pay you 2%. Your 10 year treasury is going to pay you 3%, and then your 30 year treasury is going to pay you 4%. That's a normal yield curve. The longer you lock up your money, the more money you get in interest. Makes sense. You want to have more profit in return because you're going to have to hold that treasury for longer. 9 times out of 10, you've got a normal yield curve, and that signals that there is going to be increased growth in the United States economy, which a lot of times can lead to some inflation because we've got this kind of back and forth system in the government, in the way the economy works. Now, the inverted yield curve signals the exact opposite. When you've got yields where you have a 5% yield on the 1 year treasury, going up the bond maturity length, you've got a 5 year treasury that's paying 4%, 10 year treasury paying 3%, a 30 year treasury paying 2%. That's called an inverted yield curve, and that normally signals that there is going to be a increased likelihood of a recession coming right around the corner. In fact, we saw an inverted yield curve coming into play in 2006, and it stayed inverted all the way through the 2008 financial crisis, and it went flat and then went normal at 2009 when we were coming out the other end of the recession. So the last recession was predicted by an inverted yield curve. And so that brings me to the data today. Over here on the United States Department of the Treasury, that's home.treasury.gov, you can see here that I've brought up some data for the Treasury yields for every single day of last year, and I'm going to show you where the Treasury yields were. As you can see right here, Treasury yields were in a positive correlation. Remember, the yield curve is normal if you've got higher yields on the longer maturities. You can see right here, January of 2022, 30-year maturity treasuries were paying 2%. 1-year treasuries were paying 0.4%. They're paying almost nothing. Scroll down to, let's just call it a year ago today. June 2nd, we saw that treasuries on the 1 year, I believe this is the 1 year column, right? That's the 1 year column. Yes, that's the 6 month. Let's go over here to the 1 year column. 1 year ago today, 1 year yield treasuries were paying 2%, 30-year treasuries were paying 3%. It's getting a lot flatter, as you might notice. You know, the percentage change between 0.4 and 2%, this is 5 times higher when you get to 1 year ago today, June 2nd of last year. 1-year treasuries are paying 2%, 30-year treasuries are paying 3%. That's only 50% higher as opposed to 5 times higher. If you get to the end of last year, then you see that the 1-year treasuries down here were actually paying more than the 30-year treasuries. You can see on the last day of last year, December 30th, last day they reported. They skip some days every once in a while because they don't do weekends. The last day, you can see that we had actually gone inverse. You can see here that the 30-year treasury is paying 3.97%. The 1-year treasury is paying 4.73%. The yield curve went flatline sometime around Q3 of last year. We saw it flatten out where we saw 3% on the 1 year, 3% on the 30 year. And now if you go all the way back to the top of this website and skip down to this year and skip down to today, you can see treasuries are massively inverted. 1 year treasuries are paying 5.5%, 30-year treasuries are paying 3.84%. Remember how I said an inverted yield curve where the shorter term treasuries, do it over here, the shorter term treasuries are paying a higher yield than the longer term treasuries are paying a lower yield. That inverted yield curve happens about 10% of the time, and it almost always happens right before a recession. That's where we are right now. And so there's 2 implications for that, one in the personal finance segment and one in the Bitcoin segment. An inverted yield curve almost always signals that a recession is coming, or at least there's great fear in the market that a recession is coming. Makes sense. Rates are hiking the fastest that they ever have in the last 40 years. We've not hiked rates this quickly since the 70s. When you hike rates that quickly, you do a lot of damage to the jobs market. Now, the good news is, so far, the jobs market has been doing very well. We saw U.S. unemployment jump to 15% at the height of the pandemic. It's been trading around it's been moving around 3.4 to 3.5%, but the most recent print that came out just a couple of days ago saw the unemployment rate for the United States economy jump by 30 basis points from 3.4 all the way to 3.7 in 1 month. That's the largest jump in unemployment that we've seen in quite some time. In fact, it's the largest jump in unemployment that we've seen since the pandemic, as far as I'm aware. It's not a very large jump in and of itself, but it is a big jump percentage-wise. So there's this concern in the United States economy that the hiking interest rates are going to lead to a hard landing, and that will send us into a recession, and the inverted yield curve could be predicting that. All of that to say, here in 6 to 12 months, could the United States be in a recession as the yield curve is predicting, and as hiking interest rates this quickly can cause? And what would that mean for Bitcoin? So let's unpack that. First and foremost, the United States economy is in a vulnerable position right now. Jobs growth has slowed. The unemployment rate, as you can see just in that one data point, the jump from January, February, March, April to May was a 30 basis point hike. That's a jump. That's the largest jump we've seen in U.S. unemployment. Inflation is getting very sticky at 5%. The Fed is going to probably leave interest rates at least 5% until that inflation starts coming down towards at least 3 to 4%, which means that we could see a longer plateau on the effective federal funds rate. And of course, you've also got slower GDP and economic growth as a result of the falling out of the pandemic and also the war in Russia and Ukraine. You've also got the concern that any day China could launch an invasion on Taiwan, which would bring the United States into the first conflict that it's ever fought head on with another major thermonuclear power. That is a major consideration when you also realize the fact that we're about to enter a formal trade agreement with Taiwan. Right now, Taiwan is the 12th largest trading partner of the United States. It accounts for multiple billions of dollars of trade every single year, especially in the high-tech sector. Very important sector to U.S. military technology, for one, because much of that is going into advanced aircraft and other military hardware. It's also very important for the economy at large. And two, you also don't do a trading agreement in the same way that we're working on with Taiwan unless you recognize the person that you're trading with as a country. China doesn't want the United States to recognize Taiwan as a sovereign nation because they believe that they're a breakaway rogue state of themselves. So that's increasing tensions right now in that front. So there's a lot of different bearish fundamentals going on in the global economy that's making it difficult for the United States economy to grow. Now, there are certain areas that are growing. The Texas Triangle, for example, Dallas-Fort Worth down to Austin and then Houston, that is growing exceptionally well. But for the most part, the United States economy is having a little bit of trouble because we're having to rebase and reshore all of the industrial plant. Next 30 years, that's a great thing for the blue-collar worker in the United States. Next couple of years, that's really expensive and is going to be inflationary. The United States economy is already set up to be in danger of a recession. The hiking interest rates to get inflation under control could very well send us into one, and the inversion curve and the inversion of the interest rate curve is likely predicting that as well. So that's kind of what that is showing, that there is possibly a recession in the next 6 to 12 months. It could be a shallow one. It could be a deep one. We will see. Might not happen at all. Many people are predicting it won't happen. I'm kind of leaning in that boat. I think we might be okay for the short term because they're also dropping the money supply. Now, how does that impact Bitcoin? If there is a recession in the next 6 to 12 months, then Bitcoin will be going through its first halving event in the middle of a recession that's ever done. The last halving event happened right after a recession theoretically ended, and the only reason it ended is because we printed $5 trillion and stimulated the economy. Bitcoin went through a massive moonshot, even though the market had just gone through a recession, because the way we came out of the recession was had so much money printing. So just to show you that on the chart, back here on May 11th, when we saw the last halving event, the United States economy was, according to the United States government, technically in a recession in between these two bars right here. We had just come out of the 3-month recession where the United States lost 33% of GDP, fastest drop in GDP in the history of the country. But then we saw a massive bull market on Bitcoin because Bitcoin had just gone through the halving, and there was a huge amount of liquidity that had been pumped into the market by the Fed to stave off that recession. Well, some of the remnants of that recession might be coming pretty soon. So it's possible that we'll see that recession before the halving event, and we'll be out of the recession or coming out of the recession when the halving event happens. In that scenario, that would likely lead to a very large rally because the era right after a recession a lot of times is very fertile ground for growth. I mean, many of the people that are rich in real estate right now bought a ton of investment properties in 2010, 2011 because they were dirt cheap and interest rates were at zero. The same thing when you have a forest fire. You burn the whole forest down. Some of the most growth that happens in the forest is right after the thing burns down because everything burned, all of that becoming fertilizer in the soil, and there's no competition. That may be the scenario that we go into. It's possible we enter into a recession here in the latter part of this year, moving into the beginning of next year, and right around the time the halving comes, we're coming out of it and interest rates are dropping. That's what seems to be happening over the next 12 months to me. It's possible that recession gets kicked down the road and it's happening in the first 6 months after the halving event. That would really put a damper on things. But if there is going to be a short-term recession coming, talking 6 to 9 month recession is probably what we're looking at. I'm not talking about a 2008 financial crisis style thing. I'm talking about a 2001 or a 2020 style recession that's a lot shorter in scope. Then when we see that happen, that would lead to just a complete bookend and chapter reset on the economy, because you'd likely see the money supply continue to fall. They probably wouldn't turn the printers back on that quickly. They would also likely plateau and then drop interest rates, which would likely have a huge impact on the housing market, which in the short term might crash prices, in the long term might be very healthy for it, and it would likely line up in time with the halving cycle, which would lead Bitcoin into a major rally because we'd be coming out of a recession when we entered into the halving event. That all means that short term, Bitcoin is having a very difficult time because it doesn't seem to be responding in a bullish manner to the debt ceiling deal being reached. But in the longer term, in the medium term, I should say, next 6 to 12 months, I think people are scared that a recession's coming. And so they're a little bit apprehensive about investing in the stock market, in the Bitcoin market. That being said, from my view, if the recession happens soon enough, and some economists are predicting it start even this month in June, I don't know if I'm in that boat. I don't think I am. But some economists are predicting it could start even that soon. If that recession does come and we're out of that recession, theoretically, technically, according to what's reported to us, by April of next year when the halving event comes, then that could actually be very good for Bitcoin because we would have gotten the recession out of the way. We'd have at least a few years of blue skies, and Bitcoin could grow very well. All that to say, the next year is going to be choppy, but moving into 2024, 2025, it looks like things actually may be shaping up to be quite good. Now, one final note, you'll see why that's a pun here in a minute, that I want to let you know about is that U.S. Treasury notes right now are paying a lot of money down on the short-term time frame. So there's different kinds of treasuries. They're all technically treasury bonds, but if you get down below the 1-year mark, then they're typically called, they are still bonds, but there's also another kind of investment, and those are your treasury, those are your what you call T-bills, those treasury bills. Those are investable down on much shorter term time frames. So remember, you've got your maturity date. You can invest and then you'll get your money back, and then you'll get your interest back on top of that at that given time. For example, here, the 1-month treasuries right now are paying 5.2%. 2-month treasuries are paying 5.3%. 3-month treasuries are paying nearly 5.4%. 4 and 6-month treasuries are paying 5.46 and 5.5%. What that means is that you can go to, I think it's Treasury. Treasury Direct. That's what I'm trying to say. Treasury Direct. You can go to treasurydirect.gov and you can literally, and it's so funny because they've literally got the symbol TD. So you're going to think it's TD Ameritrade. It's not TD Ameritrade. It's treasurydirect.gov. It's a government website. If you wanted to buy treasuries, you could come over here and you could buy them direct from the treasury and you wouldn't have to pay any fees to a brokerage account like Vanguard, TD Ameritrade, or anybody. And you could get 5.5% at the auction when you buy the treasury right now. And in 6 months, 5.5% cut in half, 2.75%. You make 2.575% on your money in 6 months. And then you have a very short lockup period because you have a very short maturity period. Because of the way the inversion's happening, this is a kind of a once-in-a-decade opportunity for the next year or so to take advantage of short-term T-bill profits, because it's very rare that you're able to make 5.5% back on T-bills, let alone be able to make 5.5% back on T-bills that are going to unlock in 6 months. So if you're looking for a very small kind of baseline, extremely risk-free, most people consider treasury investing almost entirely risk-free. If you basically just want 5.5% free money, obviously I'm not sponsored by the U.S. Treasury or anything, I'm just showing you an opportunity here, then with the inversion of the yield curve, that actually presents you with an opportunity to go and make money. You can come to Treasury Direct and you can come over here and you can actually buy, I'm not going to show you all of it right now, but you can actually come over here and buy yourself some treasury bills, and they will hold them and track them and account for them and everything right here on the website. And then when they unlock it, you'll make some money. For example, let's say you put $10,000 in and you put it in for 6 months and you do that twice. Let's say for whatever reason it stays at 5.5% both times. You make $550 on 10 grand. It's free money. Like literally, if you've got 10 years of savings in your savings account, you're just sitting there letting that get inflated away. You could go and put half of that into T-bills, make yourself some money. We're considering doing that because we have a bunch of money in savings. We're considering just putting that in there for a little while, just for the sake of, why not? It's free money. You want to make sure that you don't try and liquidate it, because if you try and liquidate it through Treasury Direct, that can take multiple months. It's a nightmare. You're not going to be able to liquidate it early. You theoretically can. It's a mess, but you can make some money there. So we talked about the inverted yield curve. The inverted yield curve presents an opportunity to make some money short term. It's not going to be there in a year or two when we go through this recession. If we go through this recession, the yield curve will go back normal. And as I showed you, even just a year ago, the short-term treasury yields down on that on this, like 1 month, 2 month, 3 month, 4 month, 5 month, 6 month. If you remember, literally just January of last year, they were paying 0.05%. So they weren't paying anything. All right. So treasuries are not all, T-bills are not always something to invest in, but right now there is a short-term, no pun intended, opportunity where you can make some money there. So that's kind of the content for today. I just wanted to show you guys that the debt ceiling disaster is seemingly over, but the debt ceiling disaster is basically over, but we are, of course, still looking at different reasons why a recession may be coming relatively soon. All right. Thank you guys so much for tuning in. Inverted shows lack of confidence in political budget. Yep. When you want to buy a bond and want out quick, it means you don't trust it. Yep, that's exactly right. That's a big part of it. Let's see. All right, we've got the Philosopher in chat, who's been a member for 18 months, says, Jeb, work's been hectic here today, though. Miss you guys. Blessings to you all. Hit them likes. Thank you so much, the Philosopher. Guys, make sure to hit that like button, subscribe to the channel if you haven't already, and hit that post notification bell, because tomorrow we've got a video coming out that I think you're really going to like. And over there, we're going to talk about what the future for Bitcoin looks like. We're going to talk about one of these massive, massive, massive bearish technical indicators that's a week away from calling a massive downtrend. Guys, just so you know, the video we're going to be talking about, the last time this signal flashed, and it's about to flash next week, the last time this flashed, Bitcoin dropped 73%, and it took a year to do it. All right, so make sure you tune into that video, because I'm going to talk about whether or not that's going to happen again. I'm going to show you my view of what the next couple of years will look like. Shout out to Win Peoples. Thank you so much for joining. Treasury bonds, consumer lost confidence. Government will be the only one buying those bonds. Inflation. Yes. Biden will love an open checkbook. I will veto it. Jojo said, good morning. Happy Friday. Good to see you, Jojo. The debt market is the driver of the stock market. I choose financial sovereignty. Yes, let us be the example for the nation, because the nation is using the government as an example right now, and the government is making 75 cents on the dollar for every dollar that it spends. It's a very, very unsovereign financial position to be. Should have let the debt ceiling remain. Yeah, I mean, the government having to go through this triage of figuring out what it's going to do with all of its unpaid liabilities might be a good thing in the long run. In the short term, it would send us into a depression. It's something that you can't just do overnight. There does need to be a balanced budget. I am all for, and I told you this before, I'm all for a balanced budget amendment to the United States Constitution. But getting there is you know, you don't just, even if somebody needs surgery, you don't want to just cut them open without anesthetic and just really hastily. You kind of got to do it the right way so you don't do more damage with trying to fix the problem than the problem itself is causing. So it's not something you can implement overnight, but it does need to take place. Morning, Jeb. What's your thoughts on GetHedge discontinuing their payment on crypto? Any other programs that are similar that you recommend? I would have to look into that more before giving you an answer on that. Cool, crazy techie dude. That's a cool name. I'd have to look into that more. RC Moore donated $2, said looking to go for a long at 27.2. What you think? I think you can definitely do that. I would say just be careful because we need to see what's going to happen over the next couple of days as Bitcoin responds to the debt ceiling agreement, and also as we see how Bitcoin responds to the CPI data and effective federal funds rate decision coming out over the next couple of weeks. I personally have seen some confirmations of a rally. I've not seen enough to be interested in going into a long right now. Just to let you know my outlook on that. I'm a little bit skeptical of this purported rally, even though Lux Algo came out and called it as a bullish rally. Bitcoin's not dropped down into bearishness yet, and invalidated that sell signal yet. I personally want to see some more confirmations before I would go into that trade. And I think that entry price for me would be a little bit above 27.2. Just my take, though. All right, guys, make sure you stay tuned. I'm really excited to see that. I'm really excited to show you that video that's coming out on Saturday. What is this emoji circle that's next to chat now? When I click on an emoji inside it, nothing happens. I saw that. It's a reaction, I think. I don't know exactly what it does, but it's new. You mentioned early in the stream that nearly every country runs a deficit, so why is it so bad that we are also if everyone is doing it? All right, let's think about it like this. Let's say you have 10 kids. All 10 kids are grown, they have their own families, they have their own budgets, own incomes, own expenditures, etc. If all of them are running massive budgetary deficits and you and your wife are the parents of all of these children, or at least of, one part of each of those marriages, is it a good idea for you to do what they're doing when you are the one that is the leader of them? The United States is like the father of nations in the way that geopolitics is set up right now. Everybody else follows America. And there's been contenders over the last 100 years to that order, and every one of them has failed. Post-World War I, and especially post-World War II, the United States was on top. Before them, it was Britain. We've been on top militarily, navally, and especially in economically ever since, especially the end of the Second World War. We were already moving in that direction, but we were much more isolationist before the Second World War. Then we turned into the world's police force. We are basically the father of nations, and everybody follows our lead. If all of your children are running around screaming their heads off, does that mean you, the father, should do the same thing? No. If you have 10 children and they're all under the age of 20 and they're all in your house and every single one of them has a terrible attitude, should you just adopt a terrible attitude too? No, because you're supposed to be the leader. If there's something that one person needs to stand up for and do differently, it is the leader. Like it or not, the United States is the leader of the modern world, not just the free world, the modern world. The United States needs to stand up and set an example for every other nation and not wait on every other nation to set an example. And by the way, every other nation needs to take on that burden for themselves too and set an example as well. The United States has a job as the government to be an example, and in almost every single aspect, it is not an example to follow, but that's not the way it should be. The United States government ought to be running a budgetary surplus, and it ought to be exemplifying what financial sovereignty looks like so that its citizens would learn from that and grow from that. That is the position the government ought to be in, because that's the position its citizens ought to be in, and the government should be no more than a reflection of the citizenry. Unfortunately, right now, the government is a reflection of the citizenry. So many of America's people are running a budget where they're making 75 cents on the dollar for every that they spend. They are running their finances in that way. The government needs to be the example, but at the same time, we are not the government. I'm not in government. I'm not the government. Neither are you. I don't think anybody here is in politics. If you are, please do something about it, and we'll vote for you. we need to be the example to the rest of America, and we need to start a movement of financial sovereignty where people are working on their finances and they're getting them under control, and they are really making changes in their own lives so that they are financially sovereign, and that can spread. We need to have a movement of financially sovereign people so that we will vote for financially sovereign politicians that will get the budget under control for the United States government. It's a mess right now and is one that will lead to the bankruptcy of the United States government. It might be 100 years from now, but eventually there will have to be a default because you can't keep running up tens and soon to be hundreds of trillions of dollars of debt and unpaid liabilities and not expect a default to happen eventually. It will eventually occur. And when it does, it's going to be catastrophic. Now, like I said, that could be 100 years from now. We could play this game for decades. It might not even be in our lifetimes that becomes a problem, but it will become a problem in either our lifetimes or our children's lifetimes. And so therefore, we have a duty as a citizenry to do something about it. And it starts with us getting ourselves to be financially sovereign, because let us get the log out of our eye before we get the, albeit very large, speck out of the government's eye. All right. Really appreciate all of you guys tuning in. We are going to wrap it out for the weekend. Make sure to stay tuned for that Saturday video. I think you guys are really going to like it. Really appreciate all of you for watching. Make sure to hit that like button, subscribe to the channel. Stay tuned for more financial sovereignty content, more cryptocurrency content. Very excited to see where we will go together over the course of the next several years. I am going to go ahead and wrap it out, but before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.